Good evening, everybody. I am going to do a lesson on how to trade the morning gap. I know there's lots of information out there, but I just think that there's lots of missed opportunity. Um, so we'll get into how to do the either the gap and go, uh, the gap up, the morning gap, how to play that strategy. Okay, let's get into it here. We'll use CTIX as an example because it's actually just a perfect example here of the gap and go strategy this morning. This gave an absolutely perfect example of how to play it, as well as what to do if you miss that opportunity. Okay. Right here is still pre-market, so this you can tell when the volume came in here. This candle here was actually the opening bell. Okay, so what you want to do is have access to pre-market charting. Your brokerage should have it. Everyone should have it. I love using TC2000. I find it some of the best charting software out there. The charts are beautiful. So what you do is you want to mark out your pre-market high. So 368 was the pre-market high, so you mark that with a trend line. So if you're noticing that it's gapping up on news and you're pretty certain that it has a really good odds of a continuation and a squeeze, you're going to want to, now there's one way that I like to play it is setting a stop limit buy order, and I'll show you how to do that. So focus up here for a second. So just quickly switch that over to a stop limit. Don't do stop market. Don't fuck around with market orders. So you have your high. So anything, as soon as it breaks that, you're going to get that squeeze, which is exactly what happened here. So you're going to set your stop price for 369 because you want confirmation of that break. So you're going to want to go that 1 cent higher, and you want to give yourself an offset. That's why I like the stop limit, because it you can still get in. You might have a little bit of slippage, but you won't get completely raked over the coals. So I usually like setting my offsets, especially for super low float stocks like this. This is 5.3 million. Because if they squeeze up and pop, you can definitely miss your fill. Now you definitely want to catch a fill on this. So we'll set that for, we'll go 4 cents. 3 or 4 cents here, and that's the order. Now, as you can kind of just watch it as it's getting closer to the bell, then all you do is hit buy and done. Your order will be sitting up on your box, waiting for it to get filled. Now, as soon as it crosses this line, you're going to get an instant fill. It's a very easy, stress-free way to do that. If you don't want to set that type of an order, you can just do a limit order and your limit price, because you still want to use that magic line once it crosses that line. And see the volume come in, you can just hit buy. Now, most level 2s, you can go into like your trade defaults here, and you'll be able to set an offset price. That just gives you a little bit of wiggle room. If you don't have that option, just set your limit a little bit higher above that breakout. So let's say you didn't, you're going to want to set that at 375, because you're also looking for this 375 break. It's kind of at that magic number. So we'll set it for 375. And then once that's it, you can type in your quantity. This is just an example, so we'll use 100 shares. Boom. And the second that crosses the line like that, click buy. You're in, and that's it. So that's how you play the gap and go strategy. I only play that because you're basically playing the market open. So you really need to pay attention to this key indicator, which is volume. You need to make sure that you have enough volume. It seems like a good solid stock, because once you're in, right? So what happens now if you don't get a fill or you miss this move, and then you notice up on your scanners or you hear people talking about this move here, this squeeze up, right? So this is easy. This is a really good example. You're going to want to basically set a trend line. See, this was pretty fakey in here, so you could have easily got faked out and then, potentially stopped out, because that's almost 20 cents there, excuse me, on that candle. So once you see all of this, you see how it's holding this orangish dotted line and then this pink line. The pink line is your 9 EMA, which is your 9 exponential moving average, which is a short-term momentum indicator, as well as the VWAP. VWAP is volume weighted average price. And an easy way to explain that is your VWAP, if it's above, is bullish, below is bearish. Once it goes below that VWAP line, people are definitely underwater, and then the selling pressure continues. So as long as it's bouncing off that line, it's good. So it has held VWAP now after this sell-off, so it's still bullish. It's a very good indication that it's going to sell off. So you can now your next step is you can either you're going to want to look for a break of high, right? So you can either go from here, because we got faked out on this candle. So you're going to want to look for a break here. I wouldn't worry so much about these whips in this area because that's just a lot of volatility at that point in the day. So now you have your price at 417. You can see that. Now you can do it again for setting the stop limit order. So we'll make it for 418, and then your limit price of 420, because you don't want to pay too much. And then buy. Your order will be sitting there ready for this squeeze. I love using the stop limit buy orders because they get you in nice and easy. You don't have to worry about missing it, not getting fills. So that's essentially how you play the gap and go strategy. I hope I explained that well enough for you guys. We'll just do a quick recap of it. You mark out your pre-market highs. You get an order ready, waiting to be to press the buy button. And as soon as you see it squeeze up and break those pre-market highs, you press buy and enjoy the ride. Now to sell, you always want to sell on the first. If you get candles like this, just sell half instantly. Just pay yourself half or a quarter position. You want to pay yourself a little bit along the way. It gives you the confidence and the patience to enjoy the ride. And then you set your stop at, you can set a hard stop. I'm not a fan of those, but you can also set just a mental stop at break even. So whatever the price is that you got executed on, you're going to want to set that stop price, because once you've made some money, you don't want to give any of it back. So on this first push, just sell half or a quarter, sell some sort of shares, get some money in the bank. And then if it does go back and fail and you get stopped out, you still made a little bit of money. Good job. Green is good. And then you're well on your way to be profitable. So this is a very easy strategy. And if there's any comments, anything I missed, any questions you have about the gap and go strategy, playing the morning gap, whatever you want to call it, let me know. Hit me up in the comment section. I'm always here to help. Thanks, guys. Have a good night, and like, share, and subscribe. Thank you.